Hi, good day to all. This is Kelvin here again. Welcome to this week latest edition of my weekly technical outlook on the major stock indices, where I will cover the latest trend bias, the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and as well as the German 40 indexes for the week of 8th of November to 12th of November. So before we start, let's take a quick look at the disclaimer slides first. All right, so before we jump into the technical analysis of the various major stock indices, let's have a quick look on across the globe how the major stock indices performance in terms of momentum analysis. So what we could see is that as usual I plotted last week performance versus its prior week and its prior 4 week average. Then from there I take into account of the difference between last week performance and its prior 4 week average. So the higher the number, it actually represents further potential upside momentum that is kind of inherent in the respective indices. So as you could see last week, right, in the major US benchmark indices across the board is all positive. 2% for the SPX, Nasdaq 100 3.21%, Dow Jones Industrial Average underperformed but still closed the week with a positive footing, 1.4%. And what's interesting over here is that the Russell 2000, which actually represents the small cap stocks in the US stock indices, stock exchange, actually outperformed. Very surprisingly, why they outperform? Those who actually followed me on social media, I did mention to my followers that do keep a lookout for Russell 2000. Why? Because it's actually breaking out a major range configuration that is in place since March this year. So Russell 2000 has been a laggard in the past 7 months or so. So right now, due to its very interesting, strong, positive technical configuration that was seen last week, it led it to what I call this potential further outperformance. In fact, it really outperformed last week. So I do expect Russell 2000 as well as the rest of the pack over here to actually show further potential upside rather than the risk of a multi-week corrective decline at this juncture for the US stock market, or even some are talking about a major topping, we call it a configuration, where there will be a 20% crash. But I do not see it happening right at this point in time because the previous rugged Russell 2000 has just broken out a major range configuration, which telling us that hey, right now all the US major stock indices are in line in their bullish configuration. So it still has some more legs to run, okay, before we are talking about that potential major corrective move to take shape in the US stock market, and it could actually spill over to the rest of the world. Okay, now very quickly, if you look at definitely the differences as compared to last week performance versus the prior 4 week average, for sure the Russell 2000 is the one that stood up, which is at 5.5%. Okay. What's underperforming last week was actually the China-related stock market. So, as you could know over here, is that it's actually due to this ongoing number one. There's this property market in China that has this negative sentiment that is still pretty much intact due to what I call a risk of Evergrande that is not being able to make its debt obligation, especially on the offshore bonds. And right now, they start to dig up that hey, there's other we call it property developers in China that actually has this opaque debt obligation that is suddenly being made known to the market, right? Because people say this obligation was not being required to disclose. It's only that when investors that bought this wealth management product or offshore bonds, and they start to realize that hey, due to liquidity constraint, all these developers are not able to make the payment on time. So that could actually lead to a bit of what you call it a mini scare that is still kind of intact inside the China-related stock market that led to the Hang Seng Index and the Hang Seng Tech Index to actually underperform last week. And what's important over here is that this week in China itself, the CCP, the Communist Chinese Party will kickstart a kind of a I would say that it's a closed door meeting starting from today all the way until Thursday. So the purpose of this meeting is to lay the groundwork for China President Xi to actually cement his third, fifth-year term, as well as possibly president for life. And most importantly, the one thing to look out for is because it's a closed door, so there's no way the international media will know what's being discussed. It's only perhaps maybe after Thursday, the local Chinese media will actually report something based on this internal party discussion. And on top of cementing a presidency third term, the thing to watch out over here is also the possible more concrete steps to actually implement presidency pet project. Now we call it the common prosperity, we call it economic broad-based strategy, that I believe that the China central government will actually stick to this plan as they work out in the next 3 to 5 years economic we call it growth policy to actually strengthen the social fabric of the Chinese economy. So last but not least, let's go quickly to the Nikkei 225 and German DAX. So what you could see is that there's momentum start to come in, especially on the German DAX index, where last week it actually broke past its previous high and made our, we call it our potential, our resistance and target. It'll highlight the technical configuration where is where's the next potential resistance target to go to. 2.3% for the German DAX index, and the Nikkei 225 pretty well as well, 2.49%. All right, so very quickly, let's go into the SPX sectors, the 11 sectors for last week performance. So I would say generally very healthy across the board. So nine out of 11 is in the green. Even those that is underperforming don't actually see a major sell-off of more than 1%. So underperformers are the financials at negative 0.6, very close to 0.7, negative 0.7 will be at the healthcare. Top performer will be the consumer discretionary, followed by the information technology sector. 5%, close to 5% for the consumer discretionary, and information technology coming at 3.3% over here. Okay, all right. So now very quickly, let's jump into the technical charts of the various indices that I want to share with you all. Okay, let me quickly go to CMC platform. All right. So let's start off with the SPX 500 first. Okay, so what we could see over here is a very clear push up after the break past the previous uptrend, the previous all-time high in September. So what we could see over here is that if we go down to the clear chart here, yes, it's a one push up over here, but there's still no signs of any signs of bearish exhaustion that is taking shape in this scenario here. So what we could see over here is it could be an extended impulsive up move, that medium-term up move that started from the low of 13th of October. Yes, your RSI is coming very close to the overbought level, but sometimes you know that when it hit overbought, it can stay overbought for a period of time, especially in this period in time as well. Similar over here. Okay, so what we could see over here is the most important part is as long as it didn't detect any bearish divergence. Okay, so for now, so there's no bearish divergence on the RSI, on the daily RSI. So 50-day moving average now is coming close to support at 45.40, which is the no, yeah, coming closer around. It actually moves. So the couple of days time, it will actually reach 45.40, which was the previous all-time high level. Okay, now let's quickly go through the strategy for this week. So if you recall last week, right? Last week we have resistance and zone. Resistance zone, which is at for the SPX, right? It's 47.20/47.45. Almost hit that target. On Friday itself, it printed 47.18. Okay. So what we could see now over here is the RSI. There's no bearish divergence. Yes, overbought, but no bearish divergence, showing higher high, not in the series of lower higher. So what we could see over here is it's now working off from the extreme overbought level, now coming very close to this significant ascending support that I draw, acting as a support level now in terms of short-term momentum at 6%. So if we could look at over here is that it's actually since the low of 12th October, it's now kind of extending its impulsive wave wave three bullish impulsive sequence based on the Elliott wave principle and factor analysis. So what we could have over here, the next extended potential wave 3 target will at 48.20, then definitely followed by a confluence of 47.45/47.70. Okay, so also 48.20 is also the top of this ascending channel that I drew from the low of 13th of October. So what I could do over here is I'm now actually tightened based on risk management perspective. I'm actually tightening, okay, tightening the key medium-term pivotal support for this week to 46.25. So what is 46.25? Is so coming is the if I draw the Fibo retracement, taking from the start of the wave 2, the low of 12 October, all the way up to the current all-time high on February, it's 23.6%. All right. So as long as 4625 holds, we still expect a further potential push up on the SPX 500 4745/70 in first step, followed by 4820. But however, if we start to see a 4-hour close below this 4625, then we may see a deeper pullback to actually retest the previous all-time high level at 4540. All right, which is also that 50-day moving average as well. Okay. Now moving on, next will be the Nasdaq 100. Okay, so if you could see the Nasdaq 100 chart itself over here, still also very similar to the SPX 500. Yes, one push up over here, so it's a kind of an extended impulsive wave sequence in terms of the medium term. So RSI coming close to overbought, but there's no bearish divergence yet over here. So the 50-day moving average now is acting as a support at 15,300 level. So Nasdaq 100 was actually the top performer last week among top performer among the in terms of hitting the resistance and target versus the SPX 500. Okay, because Nasdaq 100 we do have a resistance and target at 16,175 slash 16,240, which have already been clearly met last week. Because last week it printed a high of 16,457. Okay, so what we have over here is I would actually tighten the key medium-term pivotal support to 16,130. Right now, what we could see is the RSI on the four. This is the 4-hour RSI has already hit the overbought. There's no bearish divergence. Okay, okay, no clear bearish divergence, higher high, and now it's trying to actually work off from that of extreme overbought level, and now we call it exiting from the overbought level after hitting extreme overbought. So right now it's actually floating right down to the key support level as drawn on the 4-hour RSI, which is at close to the 49% level. You could see over here. So this level should actually correspond to the Titan key medium-term pivotal support at 16,130, which is also the this if I were to draw the Fibo retracement from the low of this wave 2. Wait, let me. Okay. So it's actually 16,130, which is the low of that lower boundary of this short-term ascending channel, and as well as the 34 period moving average that has managed to cap previous pullback since this extended we call it impulsive up move that took shape from the low of 13th of October. So the next resistance or target potentially to actually watch is 16,630 slash 16,720 and 16,865. So as long it's actually this extended wave 3 target, as you could see over here. So as long as 16,130 holds, we still expecting this extended impulsive wave 3 sequence to actually unfold much further. So, but however, if we start to see a 4-hour close below 16,130, then this you will start to see a kind of a multi-week corrective pullback to actually retest the previous all-time high level at 15,700. All right. So now, moving on, next will be the Hang Seng. So as you can see that the Hong Kong 50 was relatively weak last week due to this we call it kind of a bearish sentiment that is still inherent in property related stocks that actually dragging the index to actually shape a negative return in terms of weekly performance that I highlight to you all in my that momentum analysis spreadsheet that I shared with you earlier. So, but nevertheless, where it drifted down back to our key pivotal support that we highlighted last week, which is 24,550. What's 24,550? Graphically is the former swing high now turns into a pullback support. Former swing high of 27th of September to 30th of September, and also the 61.8% retracement of this last push up, okay, from the low of 4th of October all the way up to 21st of October, 61.8%. And what's interesting over here is if you could start to see the last push down last Thursday and Friday, it start to shape what I call over here lower low lower low. Can see lower low. But during this corresponding period, your RSI now instead of making lower low, is now doing higher low. You see? And after that, it really hit the extreme oversold region. So extreme oversold region flashing a bullish divergence signal. So what it means that this push down over here, the last few push down in the scene that were 3 to 4 seen on Thursday and Friday, is a bit overstretched where also momentum starts to lose its strength. That means it's actually where it happened. It happened right at the medium-term pivotal support that we defined much earlier, 24,550. So, what it means that over here is definitely this is a key support level to watch, to hold, to actually maintain this multi-week bullish buyer stance for it to actually retest 25,820. A break above should take us up to the medium-term resistance zone, which is very clear. This is the medium-term resistance zone at 26,440 slash 26,750. But if a 4 hour close below this level, below 24,550, all bets are off. Then we may still see a further slide to retest the major support at 24,000 slash 23,500 level. So what is this 24,000 level? Why is this so important? Let me take you back again on the weekly chart. Okay, so this is the weekly chart over here. So what's this 24,000? This 24,000 over here is exactly the major long-term circular ascending trend line all the way from the great financial crisis low of October 2018 2008, pardon me, 2008, that managed to cap previous steep decline from April 2015. This was caused by the second, suddenly, what I call it, the sudden Chinese yuan devaluation. And 2018, over this period here is due to, in the internal Hong Kong protests and as well as the pandemic crisis. Okay, so this ascending trend line is pretty much clear that managed to cap previous steep decline over here. So this particular decline is being kept as well. So this current decline is actually more likely primarily due to the Chinese government undertaking a what you call a more proactive stance in regulating the private sector. Okay, primarily started off with the Chinese big tech. Okay, so cut the story short, 24,550 must hold for this week on the Hong Kong 50 index in order to maintain our earlier bullish bias on the Hong Kong 50. Okay, now another Asia indices will be the Nikkei 225 or the Japan 225, we call it in our CMC platform. Okay, so basically what we could see over here is ever since it hit the previous 14 or 13-year high that was printed in February at 13 which is number of 30,760 13,716, pardon me. It started to do a very complicating consolidation pattern, kind of pushed down, retested this former expanding wedge resistance, now turns into a pullback support. In the last couple of weeks or 4 weeks or so, it started to trace out a series of higher high and higher low. RSI pretty much healthy, still holding above the 50% neutrality level. Okay, so no clear signs of a kind of a medium term or bearish reversal that is about to take shape based on the current technical configuration that is seen on the daily chart. So diving deeper into the 4 hour chart for our weekly strategy is last week we have two resistance target at 29,990, 29,900, pardon me, followed by 30,330. So it hit the first resistance target, then thereafter it just did a sideways configuration since Friday. Okay, so what I do over here is that I would actually tighten the key medium-term pivotal support to 29,070 level. So what's 29,070 level is actually this gap over here. Okay, the last Monday gap up due to the positive election result in the political party of the current prime minister, as well as right now the lower boundary of the short-term ascending channel that is in place since 6th of October. So what we have over here is RSIs now actually exiting from the overbought zone and now coming back, hitting close to a corresponding support at the 38% level. Okay, so it managed to actually work off its overbought zone already from last Friday. So potentially it may start to see another swing up as well from here. So as long as 29,070 holds for this week, we're still expecting the Japan 225 to shape further potential up move to actually test the next resistance level at 30,330. So a break above this level should actually retest the all-time high, not all-time, the 14-year high area at 30,716 slash 30,870, which is the one-time FIBO expansion target taken from the low of 6th of October, project it to the top of 20th of October, and projected it from the low of 25th of October. All right, but however, if your 4-hour close, if we start to see a 4-hour close below 29,070, the bullish bias will be negated to see a further slide to test the next support at 28,400. Okay, now last index to cover that I share will be the European benchmark, which I look at the German 40 index over here. So we could see that the German 40 index finally managed to inch up above the previous high that was actually kind of a previous high that was actually in place since this high of 16,030 level. All right, so managed to hit that level. So what we could see over here right now is there's still no signs of, we call it bearish exhaustion yet. The 100-day moving average now is acting as support as 15,600. RSI now trying to inch up to the overbought zone over here, but same thing, no signs of bearish exhaustion as well. So what it means that over here is that the medium-term uptrend still remains intact, supported by upside momentum. So let's zoom to the 4-hour chart for the strategy for this week. So very clearly, since in the 4-hour chart on the short-term basis, right, since the low of 6th of October, the price action of the German 40 index has been evolving inside this short-term ascending channel that is depicted by this light green line over here. So what we could see now is a clear breakout from the previous high at 16,030 level. So what we could have is that last week we have the target obviously at 15,960 slash 16,030. So that has been met. Over here, they did a bit of sideways. So we could see now over here, this is potentially a bullish pennant that's being formed on the shorter term. So still no sign of exhaustion. So what I do over here is I will actually tighten the key medium-term pivotal support to 15,785, which is the former swing high area of 17th of September and 13th of September. And as well now the lower boundary of this short-term ascending channel. In terms of FIBO retracement, you have to retrace this current entire short-term uptrend, which is the 23.6% retracement as well. Okay, so what we could have over here is as long for this week, as long as 15,785 holds, we expect the German 40 index to actually shape for the upside to actually test the next resistance at 16,300 level, which is the one-time FIBO expansion target, and as well as the top of this short-term ascending channel. But however, if we start to see 4-hour close below 15,785, then this bullish tone will be negated to see a deeper pullback to actually retest the 15,600 slash 15,500 level, which is the swing low area of 29 October, and as well as the 100-day moving average. That's, I think, a support at this level as well. So with that, a quick recap over here is that we still start to see no clear signs of a multi-week corrective consolidation in place across the major indices that I share with you all. The one that is currently underperforming is still the Hong Kong 50, but it's still holding above this key medium-term pivotal support that I highlighted. So still expecting the Hong Kong 50 to actually shape a kind of push up within a very within a descending wedge configuration to actually retest the medium-term range resistance that I highlighted earlier. So with that, thank you for your time. Yeah. So before we go, let me share with you all my social media, which is my Twitter account. So this is where I share um, my market commentary on a daily basis, and as well as publish some forward-looking, we call it market ideas that actually I link up to the various CMC websites. So you can actually follow me at Kelvin. Okay, so you open a Twitter account, it's free. So once you open a Twitter account, you actually search for me at Kelvin SC Wong. Then you follow me and you on the notification. So you can actually read what I publish on a frequent basis. So for this week, I have a chart of the week, which is the Russell 2000. So like I explained earlier, why Russell 2000 actually outperformed because of this major technical configuration that it managed to actually form last week. So to read more, where is the next potential resistance level? follow me and actually to find out more about the market's vibes or that I actually share on my social media on a frequent basis. So with that, have a great trading week ahead, and I see you all in my next video.